Welcome to Titan's War. The video, Assets Ranked, Which One Actually Makes You the Most Money, explains how different investments build wealth over time by comparing their earning potential, risk, and long-term benefits. It helps viewers understand which assets are most effective for financial growth and why some outperform others. It focuses on major wealth-building assets such as stocks, real estate, and businesses. Stocks are described as a popular long-term option because they grow through market appreciation and can provide dividends that act as passive income. Real estate is highlighted for its ability to generate rental income while also increasing in property value over time, making it a stable and reliable investment choice. Businesses are presented as the highest potential income-generating asset, although they require more time, skill, and risk to develop successfully. The video also briefly explores modern digital assets like online businesses and content creation, showing how technology has expanded income opportunities beyond traditional investing. It emphasizes that these newer models can also create strong passive income streams when built properly. Throughout the explanation, the video stresses the importance of understanding risk, effort, and reward when choosing investments. It also highlights compounding growth as a key factor in building long-term wealth. Finally, it encourages diversification, suggesting that combining multiple types of assets can lead to greater financial stability and higher returns over time, rather than relying on a single source of income. The overall message is that consistent investing and patience are essential for financial success. The video emphasizes an important idea that not all assets perform the same when it comes to generating returns and managing risk. It explains that each type of investment carries its own level of potential profit, stability, and uncertainty, which makes it important for investors to understand how they differ before putting money into them. Some assets may look attractive because they promise quick gains, but they often come with higher volatility and greater chances of loss. On the other hand, more stable investments may grow slowly but offer more consistent long-term results. A major focus of the video is on stocks as one of the strongest long-term wealth-building tools. Stocks are highlighted because they allow investors to own a small part of companies that can grow in value over time. One of the key advantages discussed is compounding growth, where earnings are reinvested to generate even more returns, gradually increasing overall wealth. This compounding effect becomes more powerful the longer an investor stays invested. In addition to growth, stocks can also provide dividends, which are regular payments made by companies to shareholders. These dividends can act as a steady source of passive income while still allowing the investment to grow. The video explains that this combination of capital appreciation and dividend income makes stocks especially attractive for long-term investors. Overall, the message is that understanding risk and return is essential when choosing assets. While no investment is perfect, stocks are presented as a balanced option that offers both growth potential and income, making them a key part of many successful financial strategies over time. Real estate has long been recognized as one of the most reliable and time-tested ways to build long-term wealth. It provides a sense of stability that few other investments can offer. With rental properties, you can generate consistent monthly income, creating a steady and predictable cash flow. Over time, these properties tend to increase in value, a process known as appreciation, allowing your wealth to grow quietly in the background. With the right strategy, even small improvements and upgrades can significantly boost a property's value, accelerating that growth. At its core, real estate represents a tangible, physical asset, something you can see, hold, and leverage for future opportunities. But there's another path that can be even more powerful. Owning a business unlocks a completely different level of financial potential. Unlike real estate, where returns can be steady but somewhat fixed, a business gives you the ability to scale without limits. It allows you to expand, innovate, and create something much bigger than yourself. You gain control over your income, your vision, and your growth. However, this opportunity comes with a price. Building and running a business demands time, energy, resilience, and consistent effort. The risks are higher, and success is never guaranteed. Yet when a business succeeds, the rewards can be extraordinary, sometimes even life-changing. The smartest investors don't rely on just one path. They understand the balance between the two. Real estate offers stability, security, and consistent income, while business provides growth, scalability, and unlimited upside. When combined strategically, they create a powerful wealth-building system, one that balances risk with reward and builds a strong foundation for true financial freedom. What if your money could grow, even while you sleep? That simple idea has changed the way people think about income. Instead of working every hour for every dollar, you can build systems that continue earning long after the work is done. This is where digital assets come in. Digital assets are things you create once, but can earn from repeatedly. They don't rely on your constant presence, and that's what makes them powerful. An online business, for example, can run 24/7 without stopping. It reaches customers across different countries and time zones, generating income even when you're offline. At the same time, content creation has opened new doors. It allows anyone to turn ideas, skills, or creativity into income-generating assets that keep working over time. One piece of content can earn through ads, sponsorships, affiliate links, and more. A single effort can create multiple streams of income. That's the foundation of passive income, earning without constant effort. It doesn't mean zero work, but it means building something that continues to produce results. For years, people have traded time for money. But that model has limits. There are only so many hours in a day. When you start building systems instead, you break that limit and create opportunities for growth beyond your time. Even small digital assets can grow into powerful income streams. What starts as a simple idea can expand into something much bigger. And when you build more than one stream, you reduce risk and increase stability. The key is diversification, multiple streams, one goal, freedom. But success doesn't happen instantly. Consistency turns simple efforts into long-term results. Showing up again and again is what builds momentum and lasting income. Passive income gives you more than money. It gives you time, flexibility, and control over your life. Not all assets are created equal. Some demand your time, while others quietly pay you in the background, even while you sleep. Understanding this difference can completely change how you think about money and freedom. Active assets require your constant effort. Think about freelancing or hourly work. Your income is directly tied to your time. The moment you stop working, the income stops too. It's a direct exchange, time for money. On the other hand, passive assets are designed to generate income with minimal ongoing effort. Investments, royalties, or digital products can continue earning long after the initial work is done. They don't rely on your daily presence. Take real estate as an example. It can be active, like managing tenants and maintenance yourself, or passive, like hiring a property manager and collecting rental income with little involvement. Time is often the biggest factor. Are you constantly trading hours for income, or are you building systems that work for you even when you're not actively involved? Capital also plays a role. Some assets require upfront money, but in return, they may reduce the need for daily effort. More investment can sometimes mean more freedom. Your skills matter just as much. High-value skills can transform active work into scalable opportunities, allowing you to earn beyond your time limits. A business, for instance, can either consume all your energy or be structured to run with minimal input through automation and smart systems. Digital products take this even further. Create something once, and it can be sold repeatedly without starting from zero each time. But remember, passive doesn't mean easy. Higher returns often come with higher risks, and building these systems takes effort up front. In the end, there is no one-size-fits-all answer. The best asset depends on your time, your capital, and your skill level. So choose wisely. Focus on building assets that align with your life, not just your income goals. Depending on a single source of income can quietly hold back your financial growth and limit your freedom. When your entire financial stability relies on just one stream, you're exposed to unnecessary risk. Any unexpected change, like losing a job, a drop in demand, or a client ending a contract, can immediately disrupt your income and create pressure in your daily life. When everything depends on one source, even a short interruption can affect your ability to cover expenses, save consistently, or work toward long-term goals. On the surface, it may feel simple and safe, but in reality, it carries hidden vulnerability that often goes unnoticed until a problem arises. This is where diversification becomes important. Instead of relying on one stream, you build multiple income sources that work together. This approach creates balance and reduces financial stress, because your stability is no longer tied to a single point of failure. With multiple income streams, your financial system becomes more resilient. If one source slows down, others can continue generating income and help you stay steady. This structure gives you flexibility and makes your financial life more adaptable to change. Each additional stream adds another layer of security. It could come from investments, freelancing, a side business, or digital assets. The goal is not just to earn more, but to build systems that continue producing value over time, even when you're not actively working on them every day. However, not every opportunity fits everyone. People have different skills, resources, and circumstances. What works for one person may not work for another, and following trends without understanding them can lead to poor financial decisions. Some people prioritize stability and slow, steady growth, while others are comfortable with higher risk for potentially higher returns. Understanding your own balance is essential before making decisions.